Hi everyone. This is 2026 Mentorship Program Lecture 13. And in this lecture, I will be doing a top-down analysis. Now, if you have been in the mentorship program throughout previous lectures, you know that I do a weekly live top-down analysis every week. I do host a weekly live top-down analysis. So I've been having some technical issue with the software I'm using for the live top-down analysis where I use to stream live. So I wouldn't be doing the live top-down analysis this week. Instead, I will be using a recorded video to explain my personal perspective on price going in this week. So first, let's talk about dollar index. Now I'm on the weekly time frame of the dollar index. In the weekly time frame last week, after the run of the sell side liquidity, you can see there's a brief retracement in price. Price did not close within the range of this candle. You can see here the closing price is still below the range of this candle. So I wouldn't be looking at price as a possible retracement. Instead, I'm currently looking at price to use the weekly fair value gap as a resistance area to trade lower. My drawn liquidity is anticipating lower prices on the dollar index. For now, I'm still in lower prices. I want to see price trade lower. Now, looking at this price action, there might be a counter bias in price trading deep into the weekly fair value gap. So make sure you look at the daily time frame, wait for the right alignment before actually taking any setup. But going in this week, the idea is to anticipate low prices to run the sell side liquidity. That is the draw on liquidity I'm currently looking at. On the daily time frame on the dollar index, last week after the retracement to the new week opening gap, opening price on Monday, price traded higher, traded to the daily fair value gap. And looking at this daily trend, you can see it's aligned with the idea in price trading lower. You're not seeing any counter trend currently trading into the weekly fair value gap. Looking at this price action, it's just a brief retracement from the swing high through the swing low, which is close to the mid range, with prices moving from a discount to a premium liquidity, which if you're anticipating lower prices, you would like to see price trade to a premium liquidity before actually trading lower. But the drawn liquidity is still anticipating lower prices, and now that the daily time frame is in a daily fair value gap, there may be a likelihood of price trading lower. And for those that have been going through the Forex factory, if you have been going through the Forex factory, you know that this week is the NFP week, which is the first week of this month, which is the February month. It's the first week, so we're on NFP. Now you can trade before NFP, you can take trades before NFP, and you can manage your trade through NFP if you're trading on the higher time frame, like the 1 hour time frame and the 4 hour. But if you're a day trader, you can take any setup before the NFP, but you wouldn't be holding that trade through NFP. You can wait after the announcement of the NFP, then you can take advantage of any setup if it presents itself. So be wary of that about how to implement high impact news when there's a high impact news, knowing that there's a high impact news coming up. What are the things you need to do? If you're a interweek trader and you look for this weekly expansion, you can take advantage of high impact news. You can hold your trade through high impact news. In most cases, the high impact news will lead to price trading, if not to your targets, but at least close to your target when you're on the right side of the chart. I've seen it multiple times and I've traded it multiple times. So you don't want to close a position and try to enter after price already did most of the run during those high impact news. But if a day trader, wait for the Wait for the news announcement after the news announcement before taking any trade. Or you can trade before the news, but not holding any trade during the news if you are a day trader. So going this week, pay attention to how price will be reacting to the daily fair value gap. My own personal perspective is to see price trade lower. Currently priced at the daily fair value gap. Price haven't retraced to the weekly fair value gap. That might bring a little speculation of a retracement deep into the weekly fair value gap and the daily fair value gap, maybe even close to the mid range of the fib, moving to a premium liquidity. But looking at the price, paying attention to how price is reacting to the daily fair value gap, if there is a trend trading lower, you can take advantage of the trend because I've seen lots of cases where price will use the daily points of interest before even retracing to the weekly, and you will see a quick reaction trading lower. Since it's the NFP news, we might see trend trading lower before the news. On the 1 hour time frame on the dollar index, opening price trades the daily fair value gap. Currently, price is consolidating. I think price is supporting from this order block. Actually, that's where I'm currently looking at. If price was to trade below, you can see you have a limit order already in price trading below the swing low. If there's a trade below the swing low, I will be anticipating low prices. And if there is a run trading higher, taking out this high, trading into the daily fair value gap and the weekly fair value gap, and there's a shift in structure, trading lower, I will be anticipating lower prices and my draw on liquidity. My overall target is the sell side liquidity, but at the same time, I will be looking at low hanging fruit as my first target before price trading lower to the sell side liquidity. On the weekly time frame on Euro USD, going in this week, I'm currently anticipating higher prices. And for those that don't know about my correlation plan, how I do align correlation to my trade plan, I would like to see an inverse correlation on the Euro USD dollar with the dollar index. I need to see a correlation between Euro USD and the dollar index. So looking at this, there's a correlation, an inverse correlation. I'm anticipating higher price for price to run the buy side liquidity, which is the previous week high. The previous week high is a draw on liquidity. And looking at how price closed last week, closed above this candles range, there's a possibility of a continuation. You just need to stick to the daily time frame. And what the daily time frame is doing, trading higher. Look at those key points of interest. And looking at how price supported from the weekly order block with this expansion, we might see a continuation of this trend for a while. On the daily time frame, currently you can see the price is supporting from the daily fair value gap, which means is aligned with the weekly perspective of anticipating higher prices to run the buy side liquidity. So going in the week, price currently at the daily fair value gap. I can see a 1 hour trend and a 4 hour trend trading higher, and we will be taking advantage of those setup in anticipating higher prices to run the buy side liquidity. Looking at this price action, prices currently haven't retraced to the weekly fair value gap, so make sure you take note of that. But there might be a possibility of a deep retracement into the daily fair value gap at the same time trading into the weekly fair value gap. But overall, our idea is to anticipate higher prices, which is my personal idea of anticipating higher prices to run the buy side liquidity. On the 1 hour time frame on Euro USD, from the opening price on Sunday, looking at this price action is quite similar to the dollar index in retracing to the daily fair value gap, which currently, based on shifts in structure, trading higher. This is still in a downtrend. Looking at this order block, a trend above this order block will lead to a continuation trading higher. which personally I will be anticipating higher prices if prices will trade above the swing high, a retracement to the breakers block or the other block will be an area I'll be looking at price to support to trade higher. So make sure you do the markings on your charts just like how I did on mine and take notes on how price is trading. Look at those key factors for you to take advantage of the idea if price were to trade to the idea in this lecture. On a weekly time frame on GBP/USD, after price took out the buy side liquidity, a retracement, closing as an up close candle, closing above the previous candle. Looking at this week, I'm anticipating higher prices and my draw on liquidity is to see a run on the previous week high, which is a buy side liquidity. I'm currently looking at this price action in price trading higher, which will lead to lower dollar. So I'm sticking with the idea and it's aligned with Euro USD, it's aligned with the dollar index. So I can see otherwise throughout the weeks or throughout February that will lead to any change in my bias. But for now, I'm sticking with the idea in price trading higher. On a daily time frame on GBP USD, looking at this trend, you can see the trend is aligned with the idea in price trading higher from the swing low to the swing high. Currently, price still at a premium, which I told you guys that if there is a high volatility in price, it might lead to higher prices even without price trading to a discount. So there are many chances where price wouldn't be trading to a discount before creating a new high. Mostly because the swing high we're currently looking at as a draw on liquidity is just a previous week high on a weekly time frame. So it might be a run on that high before a brief retracement trading deep. So looking at the daily time frame, still anticipating higher prices. And how price is reacting to the daily fair value gap so far from the opening price this week. Price have support now price above the opening price after retracing to the daily fair value gap, currently above the opening price. And on the 1 hour time frame, I can be sure that there's a shift in structure. So let's move to the 1 hour time frame. On the 1 hour time frame in GBP/USD, from the opening price after the retracement to the daily fair value gap, price took out the swing low, traded higher, took out the swing high, leading to a shift in structure. Point of interest for you to pay attention to should be the breakers block at the same time. If price was to trade deep, look at the block. And your draw on liquidity is to anticipate higher prices. I think this is the only trade currently available with the idea of price trading higher. So you can take advantage of the setup. Remember, this is for education purpose, just for you to learn how to study price when you have a clear perspective on where price is actually trading to. Don't look as an idea that I'm taking this trade, so you guys should go to put in a lot of risks, hoping that I'm right about where I'm anticipating price to trade to and price to trade to the bias. In most of the times, you guys have seen me call price right. In most of the time, at the same time, you guys have seen me call price wrong. When I'm looking at price trading to this direction and price trade to the other direction. So this is not a high probability setup because I'm looking at it as a support in price trading higher. So do your own diligence before actually taking advantage of any trade and make sure that whatever trade you're taking should be something that you understand and is fully aligned with your plan before actually taking any trade or any trade setup. On the weekly time frame on USD JPY last week after the run of the sell side liquidity retracement from this swing high to swing low, looking at this price action currently from the opening price have traded to the weekly fair value gap on USD JPY, and my draw on liquidity is anticipating lower prices to run the previous week low. Currently, price already took out previous week high, trading into the weekly fair value gap. And my draw on liquidity is the sell side liquidity. And the point of interest I'll be paying attention to will be the breakers block, which is the candle here. Paying attention to how price is reacting to this candle. And the weekly fair value gap of anticipating lower prices to run the sell side liquidity. On a daily time frame on USD JPY, from the opening price, you can see how price traded the daily fair value gap at the same time to the weekly fair value gap. I'm anticipating lower prices and price trading lower. Now, looking at this price action, you can see that the price action on the dollar index, Euro USD, GBP USD, and USD JPY are quite similar. You're very similar when it comes to correlation. So I've told you guys that whatever currency you're trading, look at the correlated pairs to that currency and look for the similarity, because whenever you have a bias that reflects on the rest currencies that are correlated with your main currency, that makes it a high probability setup. Now, I wouldn't call this a high probability setup. There's still some doubts about price trading lower, so I wouldn't call this a full-time high probability setup. Sometimes how I do define a high probability setup is when the high impact news is aligned with the idea. Seeing the price is already in the weekly fair value gap on the daily fair value gap, and the high impact news is going to be on a Friday. Although we do have unemployment claims on Tuesday, and we have non-farm payroll on, I think it's on Wednesday or on Tuesday. Sorry, unless I pull it up before I can know the exact date. But we have two high impact news before the actual NFP on Friday, so that might lead to lower prices before the main news reading lower. So learn how to look at how price is reacting during those high impact news. Still anticipating lower prices, which is the overall bias going in this week. On the 1 hour time frame on USD JPY, after the retracement to the weekly fair value gap and the daily fair value gap, looking at the 1 hour time frame, you can see currently there isn't any shift in structure. For it to be a shift in structure, I need to see a run on the swing low at the same time, trading lower to the swing low. You can see I have a limit set to have an alert when price trade lower and running out the swing low. Before I can call this a shift in structure, I need to see price trade lower, take out this low and this low before I can call it a swing low, and currently price on a downtrend. At the same thing to the 4 hour time frame, price is still looking a little bit bullish, trading higher, supporting from the other block. I want to see price fail to use this other block as a support before anticipating lower prices or before actually taking any entry. So make sure you understand. So the next lecture we're going to talk about trade plan. I'll be showing you guys my personal trade plan, how you can implement it, and how to have your own personal trade plan, which I told you guys at this point in the lecture, you're supposed to have a trade plan which you have been practicing on how to execute the trade plan. So on the next lecture, we're going to talk about it. So see you guys in the next lecture.